Hey traders, welcome back to the FXE YouTube channel. Today I will do the weekly analysis, which will include a top down of both DXY and EU, and then do a quick review of the weekly price action, and then look at some potential scenarios for next week. So before we get into the charts, I want to have a quick look at the news first. So I'll be using the economic calendar directly from TradingView. Unfortunately, it's missing a lot of important events, but I'll try my best to fill in the gaps. So on Monday, we start with EUR manufacturing PMI, which is not listed here. Then in New York session, we have ISM manufacturing PMI. And then an hour after that, we have the Fed Powell speaking. And then on Tuesday, we have JOLTS job openings. And then on Wednesday, we have, which is not listed here, EUR services PMI. And then later during New York session, we have ISM services PMI. And then 15 minutes before the ISM services PMI, we also have S&P PMI. And then on Thursday, it's not listed here, but we have unemployment claims for the US during New York session. And then on Friday, we have non-farm payrolls again. And then we also have unemployment rate as well. So as you can see, there are a lot of high impact news next week. There's going to be a lot of opportunities. There's going to be a lot of price movement and a lot of opportunities for taking trades. The problem will be as they're going to be based on news, they're probably not going to be easy to get into. Okay, so going to the charts now, let's start with DXY on the monthly time frame. So those have been that have been watching my videos are quite aware of what has been happening and what I've been anticipating. So as you can see, we've had a huge bullish run since May 2021. Breaking structure to the upside, creating this high way up here, and thereafter having a massive pullback, coming back into the monthly fair value, monthly breaker block, the monthly fair value gap, nearly filling the monthly fair value gap, nearly coming to OTE before having a huge reaction to the upside, which can be seen with this wick. Thereafter, in August, continuing to the upside, and then September as well, continuing to the upside. We've cleared this internal range. We've come into the monthly fair value gap. I'm thinking that price can still go higher from here. Whether it fills the fair value gap or not, whether it comes all the way and breaks this buy side liquidity above, that remains to be seen. But for now, short term, I still think we have room to come up a little higher. And this can be seen a little clearer on the weekly time frame. So just really quick on the weekly time frame, we've had this massive bullish run to the upside, 11 consecutive weeks of bullish candles. We've cleared this liquidity level here, this liquidity level here. We've come into the weekly order block and started to have some reaction. Looking at the lower time frames, it looks like the reaction may be done and we may continue up from here, targeting the buy side liquidity here, the buy side liquidity here, as well as coming into this weekly fair value gap. So now if we go into the daily time frame, so I'll just focus on the last few days of price action. So we started the week bullish with 3 bullish candles pushing further to the upside. We cleared the weekly order block, had a reaction off of it, started to come down, and then on Friday we came down further, filling the daily fair value gap, so the only inefficiency that's left behind besides the one way down here, and thereafter having a massive reaction, pushing back up to the upside, creating a bullish candle. So looking at this, it looks like we may have come down to the level that it wanted to come to, and now may continue pushing to the upside and targeting the inefficiencies above. If we go down on the lower time frames, so I've left these past markings here for a reason. They were drawn during last weekend's weekend analysis. So my expectation was we clear this liquidity level before having a reaction and starting to push down, or continuing further to the upside, coming into the order block before having a reaction, before coming back down. But for those that watched the last video, I was thinking that we were potentially going to have a bigger pullback after that huge bullish run to the upside. So I was right on the level that price reacted off of. The only thing right now is I don't think I'm right on a bigger pullback, because looking at this, it looks like price did come back down to the levels that it wanted to get to, and then thereafter did have a reaction where it where price wanted to go to, so filling those inefficiency coming into the order block before reacting and then pushing back up. So as of right now, it's in 4-hour supply. You can see it's reacting off of it a little. So now the question is what happens next? Do we continue to the upside from here, or this supply holds and we just come down? And if I go to the hourly time frame, so these POIs are based on the hourly time frame. So my thought now is, as we've left these inefficiencies behind, I'm thinking maybe we go back for them before continuing to push to the upside. There's not really so much in terms of inefficiency left on the upside. The only thing we really have that's left on the upside is just supply levels. So price coming down, filling the fair value gap, continuing to the upside, or potentially price coming down even further into the 1-hour order block before pushing to the upside, or potentially this supply level holds and we just start to push down from here, or we come up a little higher into this supply level, maybe even retesting this order block, before coming down. And as I mentioned before, we do have a lot of news events this coming week, so those fundamentals could be a driver to push price in an unexpected direction and potentially pave the way for price action into Q4 as well. So if those news drivers start to weaken the dollar, then potentially we may see that continuation into Q4, where we get a bigger pullback and start to look for longs on the majors instead of shorts. Now if we go to EU, starting with the monthly time frame. So as I said in previous videos, this is more or less the inverse of what we're seeing on DXY. So huge bearish structure to the downside, breaking monthly structure lows, thereafter creating a low, having a massive pullback to the upside, coming into the monthly breaker block, tapping into monthly OTE before having a massive reaction, which can be seen with this huge wick, then continuation with a bearish candle in August, and continuation with a bearish candle in September. and this bearish candle broke this structure low, and came nearly into this structure low right here. Missed it just by a few pips. So expectation on the higher time frame is for price to continue down, come into the fair value gap, the monthly fair value gap here, and thereafter we see if it reacts off of it or continues and breaks the low. Now if we go to the weekly time frame, so inverse of Dixie, huge bearish run to the downside with 11 consecutive bearish candles without having a single bullish candle in between. We did have some huge wicks to the upside, but none of them creating any bullish candles. We broke the structure low here, and we broke the structure low here. Didn't close below it, as we had a massive reaction, but essentially the idea is we continue further to the downside, targeting this sell side liquidity, and on the weekly time frame we have this inefficiency left right here, where price could go to before having a reaction and a bigger pullback to the upside. If we go on the daily time frame, so on the daily time frame, again just focusing on the last few days, so we did push down the early part of last week. We did create a small little fair value gap on the way down, and then on Thursday, before clearing the sell side liquidity below, we had a massive reaction pushing to the upside, and thereafter some continuation on Friday, filling the fair value gap, and then having a massive reaction thereafter. So looking at the way that it came into this fair value gap and then after pushed down aggressively, gives me the impression that maybe it's seek the inefficiency that it wanted to go to, and now it's ready to start continuing to push to the downside. If we go to the 4-hour time frame, so 4-hour time frame isn't as clear, so let me go directly to the 1-hour time frame. So as I said, we started the week bearish. We created a 1-hour fair value gap on the way down. As we were pushing lower and lower, we did eventually have a pullback, coming back into that hourly fair value gap before continuing and pushing further to the downside. Again, we created a fair value gap. I believe this is a 4-hour fair value gap. Yes, correct. It's a 4-hour fair value gap that was created on this push down as price was driving lower. Left that fair value gap, and as I said, it didn't get to the sell side liquidity. It did some consolidation, started to show some signs of strength with one last pullback before pushing up, tapping into that 4-hour fair value gap before having a reaction, and then thereafter continuing and pushing to the upside, targeting the daily fair value gap. Completely filled the daily fair value gap, thereafter having a huge reaction off of it with subsequent pullback before continuing to the downside. And where did we end the week? We ended the week on this 1-hour fair value gap. So that one was filled. So now the question is, what happens next? Do we react off this fair value gap, continue to the upside, or continue to the downside? So based on higher time frame analysis, obviously my bias is going to be more towards the higher time frames, and seeing that this higher time frame daily fair value gap was respected, we reacted off of it, it's more likely that that's going to have more precedence over this hourly fair value gap, and we continue down. So let's go to the 15-minute and then just do the weekly review. So as I said, we started off the week bearish. We had a lot of consolidation at the beginning of the week, and then once London or Frankfurt Open came around, we had a massive manipulation candle pushing to the upside, mitigating supply, and thereafter driving to the downside, breaking the range low, giving impression that okay, it's going to go down from here. Had one last pullback back into the inefficiency, so the fair value gap, and then thereafter I entered a short right here, targeting the fair value gap below, and sure enough, price tapped into the area I was looking at, where I had a sell stop entered as price was pushing up, tapped me into the trade, and thereafter never even came back to my entry before pushing down and eventually hitting my TP. So I wasn't expecting a huge massive push to the downside at this point, but once it started to break down further, had some pullback, but then breaking even lower. I was looking for longs to target the fair value gap, thinking that it would come back here before targeting the draws on liquidity below. And I actually entered in this area right around Frankfurt Open, thinking that the price may drive up from here. So initially it did have a push up, came back into supply in this area, and thereafter it actually just plummeted and cleared the low. So I was taken out of this trade, took a loss, but thereafter price did eventually go as I was expecting, coming into this fair value gap before pushing further to the downside. And when it came into this fair value gap, I was looking for shorts. And after that this candle right here, where it, where it started to show some signs of strength, when it came back down, the high was respected. I set a sell stop, and thereafter price drove to the downside. My first TP, I believe, was this low, and then the rest I took off at this low. So did push down, come the next day during London, had a pullback, the high was respected, and thereafter pushing further to the downside, it broke this low, thereafter coming back to the fair value gap that was created prior to New York, and then push down even further. And this is the area where we had New York Open. There was a fair value gap left behind, price pushed up into it, thereafter continuing further to the downside. So these fair value gaps have been really good at holding when the direction is strong in one direction. So you could have actually entered here and here as well, for continuation targeting this draw on liquidity here, but as you can see, it went even further below that, but unfortunately didn't reach the sell side liquidity down here. So after this low was created really late on Thursday in New York session, we started to have a strong reaction, and then after some consolidation before pushing down, retesting the extreme of the demand, and this was at London session on Thursday, before having a massive reaction, showing signs of strength that it's gonna continue to push up to the upside. So the only pullback you had right here was a retest of this fair value gap, this huge fair value gap right here, that it came back into. Actually came into the top of the order block as well before pushing to the upside. And then on Thursday during New York session, we had a news event which created a massive wick to the upside. Could have been seen as a sign of strength, but at the same time it could have just been seen as a liquidity grab to drive price to the downside. But once it came down here, it tapped into this 15-minute demand level, respected it, pushed away from it, that's what I was thinking. It's likely that price is going to push up instead. And once it pushed up in this area, there was a breaker block right here that it came back into. There was some inefficiency that it came into, and that's where I set the buy stop, covering this candle low. And after I set it, it actually pushed up quite quickly and then continued to the upside. Once it broke this high, I was quite sure that it was going to continue. Even though it had a pullback, I was just seeing that as just mitigation. And sure enough, it continued to the upside. My first target was actually this high right here. So targeting this liquidity to be swept and price to come into the fair value gap. I just set my first TP at this high, which it ultimately hit. And my final TP was the daily fair value gap that was left behind up here. So even though we had a pullback later in the evening, I already took half off the trade, so I just left it. And eventually price did continue to push back up to the upside. One last pullback during Japan Open. Thereafter, continuing the drive to the upside. Once this high went, I was quite sure that yeah, it's going to continue to push up to that daily fair value gap. At Frankfurt Open, we had this push to the upside, so it's drive to the upside, showing more signs of strength. And then on London Open, we had the manipulation, sweeping the equal lows that were created. So equal lows being these lows right here. So swept those equal lows and thereafter continued to drive up to the upside, and shortly after hitting the perfect target, which was the daily fair value gap. And then there was some consolidation after that. Getting close to New York Open, we started to push down, and then after New York Open, one last pullback to mitigate the supply, come back into the fair value gap, and thereafter start to show some signs of weakness before driving further to the downside, coming into this hourly fair value gap. So again, now I ask the question, what's next? So I tend to have more strength on the higher time frame PD arrays or the lower time frame PD arrays. So as the higher time frame bearish daily fair value gap was respected, even though we are showing some respect of the hourly PD array, I'm guessing the daily PD array is gonna win over the hourly PD array. As such, my initial thought is maybe we'll come up, sweep some liquidity, maybe this supply area before continuing to the downside. Supply here, or the more obvious one is this one right here, where we have a pullback into that supply before continuing to the downside. But at the same time, we do have an hourly shift, so potentially we have unmitigated demand down here. Sorry, just so it's a little more obvious, the idea is to go up to continue to the downside for these two trades. But as we have that break of, not break of structure, but a shift to the upside, potentially that is the signal that now we're going to have a bigger pullback, and we come down to some of these unmitigated areas, and then continue to push to the upside. We do have liquidity resting down here, so maybe it sweeps that liquidity, comes into the unmitigated demand before starting the bigger pullback and pushing to the upside. Anyways, that sums up this weekend's analysis. I'll continue to try to do daily videos when they make sense, when I see the setups forming. The main problem I've had the last week or two is the setups that I see forming are forming during session, and by then it's too late. So regardless of whether it's a daily video or the next weekend video, I'll see you for the next one. Peace. Hey, you made it to the very end. Thanks for that. If you could do me one more favor and click the like button and subscribe if you haven't already, it'll allow the YouTube algos to kick in and help this channel grow. Thanks again. Cheers.